Welcome back to the ETF Inspector. It's Saturday, August 16th, about 4:30 in the afternoon. Still kind of vacation edition, but we're getting packed up, getting ready to leave. I just wanted to get these videos recorded and uploaded before we started driving so that they would take minutes to upload rather than hours. So welcome if you're new. We picked up a lot of new subscribers today after a Spaces with Ambassador of Kwan, Parabolic Nurse. Let me see if I can find it real quick. They were the host and co-host, and then Max Convexity and I talked about Ulti along with Retire on Dividends. So he's got the link here if you want to play back. Ambassador Kwan. If I can figure out how, I will copy that link and post it at the top of the comments. But this video is not talking about any yield max or round hill. This is just my personal trade. So this is kind of just the fun video. If you're like trading or you want to see other people trading, I just tell you how I did this week. If I'm doing well or losing, doesn't matter. I just tell it all and just show how my trading account is going. So we'll just go ahead and get right into it. First off, I have a poor man's covered call. And if you're not familiar, just real quickly, you buy a leap, which is a deep in the money call with a long expiration, which I did back in March on Intel. I bought at a $15 strike. That way I can sit and sell calls off of it all along. And if it gets assigned, well, I have something to back it up as long as I've sold the call above that 15 strike. So you can see I've been selling throughout time. This is all credits. This side of the screen over here is all debits, buying to close each of them out. So most recently, I sold a $22 call that expires next Friday. So I got 1 week left on it. And Intel went through the roof this week after, I don't watch the news, so I don't know if it was the president or just, news reported that the government is looking something about taking a stake in Intel or something along those lines. And so all of a sudden, Intel went from like $19 to $20 a share all the way up to $24.50. That's going to make this one fun to try to close out. I sold it for 41 cents. As of close on Friday, it was going to cost $2.73 to close out. So in this coming week, I'm just going to kind of play it down close to the end, and I'm going to look to roll it. I'll roll it out roughly a month if I can, whatever it's going to take to get a credit on it. So I'll be looking to increase the strike, but I'll probably only be able to get about 50 cents worth of an increase over a month or two's time. So that's rough. But along with that, increasing the value of my long call, the deep in the money call, went up as well to $10.10 per share. So worst case scenario, just close the whole thing out and be done with it. So no trades this week on it, but this past week, on this upcoming week, I will have to close and roll that short call on the August 22nd, $22. Next up, IONQ. If you've watched these videos before, you know this is my favorite one to wheel with. All these trades are this year, starting back in January, selling cash secured puts, getting assigned, turning around selling covered calls until they got assigned, back to selling cash secured puts. So that's where I am in the cycle. So I had last week had a call expiring, a sold call, short call expiring on August 15th. It was a $39 strike. I had originally collected $1.09 per share, selling that. I closed it on Friday for 5 cents. So $5.02 paid to close out after collecting $108.33. And I just went ahead and did it again. So I sold one for this coming Friday, August 22nd. Same strike price, $39, because the share price was sitting right around the same range as it was the week before. I like it. I got another $1 per share. So after fees, $99.33. So you don't have to tally along. I've got a tally at the end when I go over my dividends that shows how much money I made or lost on each option trade this week. So that was a positive. And if we scroll up, so far this year, I have made $1,400 selling calls and puts, or the shares assigned, anything, all the above, on trading a wheel strategy on IONQ. So by far my favorite. And my little brother actually is the one that got me onto them. Next in the wheel strategy, didn't mean for that to go to the wrong screen. Here we go. Mara, or Mara, however you say it. I sold a cash secured put on the 12th, so that'd be Tuesday, with a $15 strike expiring this next Friday, August 22nd, collecting 28 cents per share, or $28 minus the fee, $27.33. And then Mara had a rough day, dropping down. I think at points it got below 15 on Thursday, so I sold another put because this money was the money I was using to sell puts on TSLL, but I don't like it when it gets up in the $12, $13, $14 range because I like to sell $10 puts, $9 puts. So Mara I like in this price range. So you only want to sell a put on an underlying that you're willing to you want to own, and at a price range that you want to own it at. Don't go chasing just the high premiums, or do if you want to. This isn't financial advice. But so the second one sold a $14 strike. So this is I don't know if that's enough to call it laddering. Usually laddering, you're going to go different expiration dates and different strike prices. But in any case, I could be getting shares at 15, I could be getting shares at 14, or I may not be getting any shares, depending on what Mara does this coming week. But I collected roughly $27 and $30 or $19 on that. Mara ended the day at 15.67, so ended the week actually. That 16, you can ignore it. It's thinking it's doing a calculation there that it's not. So far both are out of the money, and if ending that way would expire worthless. I think IONQ was the same way. IONQ ended at 40.23, so a $39 strike is also still out of the money. Last of the wheel strategies. Sorry, I got two screens here and they keep popping up on the other screen. Last of the wheel strategies. Last week, if you watched, I got assigned on that cash secured put on Open Door, stock ticker Open, OPEN. So I got assigned those shares at $2.50 after selling two different puts. So I've already collected basically $83 or $82 in premium. Then I went ahead and got assigned. So immediately, I'm not tied to this one. I didn't mind if I got assigned, but I don't care about it. So I sold right back at the same strike, a covered call. I collected 18 cents per share on that, $17.33 after paying the fees. And it's looking like it'll probably get assigned. It's expiring this coming Friday, August 22nd, because they had a big day. They had a big week, right? They were up Monday, up Tuesday, and then I think again up Friday. I don't know how they did Tuesday or Wednesday and Thursday, but now they're 317. So with a 250 strike, I'm not going to sit and chase it because I want to keep my shares or anything. I'll probably let them get assigned. In the event it drops back down some, or if the IV goes up so much that I can roll it and still get a credit, I'll keep doing that, but I'm not going to chase it. I don't care if the shares go. So I collected about $17 on that. So now at this point, since I'm assigned, the calculation over here switches from a profit and loss to a cost basis. So I have 100 shares that of the underlying open with a cost basis of about $155 total. So not bad when it's worth $317 right now. Obviously, it's not worth $317 to me because I've sold a call at $250. So it doesn't matter if this price goes all the way to $500. My shares are going to get sold at $250. But either way, I've basically only paid 155 for them, so doing well. That's the last of the wheel strategies. Final option strategy before we get to the dividends is spreads. If you've watched, I've had a rough year. This is my first year trading spreads. I had to increase my option level, I believe, to level 2 earlier in the year so I could start doing spreads. And so far, I'm actually in the negative on the year. A lot of that's got to do with Circle Internet Group. They got me 2 weeks in a row, pretty big. And also, I got bit on an Apple trade earlier in the year. But as far as this video is concerned, this week, let's see, I started off by closing out a couple of spreads from the previous week. So I already had a GameStop put spread where the strike price was sold at $21.50 and purchased at $19.50. It ended up being out of the money. I got to close those out for a difference of basically a penny per share on 2 contracts or 200 shares. So all in all, I only had to pay $2.20 to close out the GameStop put spread that I received $42.10 to open. Now, that was already considered in a previous week, that income, so it's just going to look like a loss this week on GameStop of $2.20. And then I had a put spread again on Upstart that expired on Friday with the strike price, the sold price or the short price at 60 and the other end of the spread at 57.50. So it was a $2.50 spread. Collected 45-ish dollars minus $1.34 in fees. So that one I was able to close out for 3 cents a share plus the fees. So I spent $3.69 to close that out after collecting $43.66 the previous week. And I started another Upstart put spread because I liked it. So we're doing it again for the following week. Premium's still good there. So on this one, I selected the same short price, 60. 57.50 wasn't available, so I went 58. So my spread actually shrunk a little. It's only a $2 spread now instead of $2.50, and I actually received more money. So picking up $50 on a $2 or 50 cents on a $2 spread, or $50 on a $200 maximum loss. So that's nice. That's 25% as far as on your collateral. Had to pay the fees, of course. So I brought in $48.66. So profits on that, well, we'll call income on that, credits on that, $48.66, and a debit of $3.69. We total that out on the last page. And then Robinhood, got a little beat up early in the week or middle of the week. So entered a trade where I sold a put at 105 and bought a put at 100, so it's a $5 spread there. The stock was at 110 when I did it, so both trades this week were roughly sold 5% out of the money. On this one, $5 spread, I collected $1.25 per share after fees, $123.66. So where these are sitting right now, as long as Hood stays above 105, I'll get to keep all this money. And it closed at 114.17. It actually went up $4 almost from where it was when I sold it. So I'm actually doing well, in good position. And Upstart also went up from where it was when I sold it to 64. And as long as it stays above 60, I will get to keep all that premium as well. So that's my spreads for the week. And again, I'm really wanting to get that into the green. I don't like that I'm losing money on the year. So I need to get a couple, and I've started chipping away at smaller ones, 40s and 50s at a time, rather than swinging for the fence. All right, so that's all the different option plays. So we had poor man's covered calls, including leaps. We had wheel strategies, and then we had spreads. And now we get into the dividend paying funds, and sometimes I trade options on them as well. So we did have some different things happening there. We'll start out with the two main ones. I have Ulti, YMAX, Misty, Nefli, and Aptly. I have sold my shares of AMZ through assignment, and as you can see, 100 shares of my Aptly also got assigned away, called away. But we'll get back to that in just a minute. In any case, none of these, it was not any of their week, so I just got payments from Ulti and YMAX. If I slide over here, earlier in the year, I switched over. I stopped with YMAG and switched it to YMAX. So these YMAX payments are shrinking, though. If you look at the last week of July was almost 39, then August was almost 35. The first week, second week it was 30. The third week it's 23. I didn't decrease my shares. This is just decreasing dividends. So that's the payment this week from YMAX was $23.36. And then from Ulti, we got the opposite going, but that's also because I'm keep on buying more shares. So payment this week from Ulti was $133.30. We scroll up. So for the week, those two combined for $156.66. I'm bouncing around, I know. I've got my cost basis in here. I did have to estimate my Ulti cost basis because I got assigned some shares and I bought some shares on Friday, and my brokerage it won't figure out my new cost basis until Monday. But I had a 615 cost basis before Friday. I picked up some shares in the high 580s, and then I got assigned some shares at $6. So I would guess that I'm down a penny or two on my cost basis. Ulti closed at $5.90. So technically I'm down $362 on my money that I've put into Ulti, but I've received $964. So still to the good by $600 on them. YMAX, right, I got 212 shares. Again, I've lost about $116 from drops in the share price, but I've received $465 from distribution. So again, it's going well in my favor and better than most dividend payers. Same goes for Misty. So I got assigned some shares, 100 shares of Misty. I had a $19.50 sold on Misty, and it was looking like I was going to get a chance to early in the week. It was looking like I either wouldn't get assigned or I'd get to roll it again and get another nice premium, since it would be like right at the money. And MicroStrategy had a rough week, so did Misty, and it dropped all the way down into the 17s. So I obviously got assigned on that one. I do keep track of my options income on these high yield funds. I don't consider it wheels. So I bought the funds that I wanted, and then since I've gotten into all the coverage, I like Ulti so much that I am not selling calls on it. Everything else, I like them, but I am not tied to them. So I will sell covered calls above my cost basis, and if they go, great, that's fine. And I will put the money into Ulti, and I'll sell cash secured puts below my cost basis. And if I get more, great. I lowered my cost basis, and I'll keep collecting dividends. So this week, I had a couple of contracts expire, or options, right? So I had expired calls that I had sold on YMAX and Nefli. Neither of them hit the strike prices that I sold at, so I got to collect that money for free and keep my shares. I got assigned on my Aptly call that was sold at 13. Apple had a nice week. Aptly went up with them. So those got called away, and that's fine. No big deal. That's more money to put into Ulti. I did get assigned on these $6 puts for Ulti because it was obviously below $6. And I got assigned on the Misty put put for 1950 because it was below 1950. My trading balance ended the week at 27,567. That's my trading account. And this is just the rest of the totals for moves that were made this week. We talked about them already on the other pages. So Mara brought in $46.66. That's getting added to the dividends from YMAX and Ulti. IONQ on the close and roll, I had a credit of $94.31. Robinhood on that put spread, I collected $123.66. Put spread on Upstart, collecting $44.97. That also includes the payment to close out the previous week's Open Door. I collected $17.33, selling that call at the money. And then GameStop, I paid $2.20 to close out the put spread that was sold in the previous week. So all in all, from in my trading account, as far as dividends and options, I brought in $481.39 this week. All right, that's it. All I got for you. I'll be making a couple more videos this week or this weekend, so keep an eye out for that. Maybe even get it made before I hit the road. So got a dad joke for you before I do. So thanks for watching. Please comment if you do any of these type of trades, or if you think they're a bad idea or a good idea, or you trading along, or what you're doing. I'm always interested in talking about options. So that's one of the things I really like about doing these videos and talking in the live chat in the comments. So dad joke of the day. I took a poll recently and found that 100% of the people in the tent were pissed off at me. Okay. That one might take you a second to understand. Take the poll, the tent falls down. All right. Have a good rest of your weekend. I'll catch you in the next video.